Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, and we are now on March 11th, 2019, about 3:50 p.m. Central Daylight Time. Yeah, things have changed. Before I get too far, I'm holding my live webinar. I do it every 2 to 3 weeks, and it's going to be this Thursday at 12:30 p.m. Central Daylight Time. In order to get to it, you need an invite. Now, I sent out my invite groups, the ones that I have not culled off lists, this morning. So if you don't have it, it means you're not on my invite list. And how you get on the invite list is pretty simple, and it's a free webinar. You call my staff, and they'll send you out the invite. Don't come late, we fill. So you want to get there on time. It's 12:30 p.m. Central Daylight Time, and yes, you need a password. You can't get in without it. We've tested it. We know the passwords work. I expect to see you there if you want to attend. All right. So in the market, we wake up in the morning to Boeing down sharply. So we saw the Dow get hit because that's a Boeing component. The other stock indices, though, were holding. They were in the green, as we could say. That was in the red. And as the day kept wearing on, even though we've seen China, parts of Indonesia, other countries starting to say, no, they're not going to fly this new plane until they know what went wrong, we saw others, like in America, so far. The word is so far, still flying their airplanes. Now, the biggest carrier, I believe, in the U.S. is Southwest, which is going to have several hundred, maybe 250 of those planes. I don't know how many they've gotten exactly, but it's probably a third or something. So that's something to be watching for all of us. Metal market's still under a little pressure, but gold and platinum came up today. Dollar index tried the day on the stronger side, didn't go anywhere, but the pound up. And there's important votes coming in the pound starting tomorrow, right possibly through Thursday. The word is possibly. What if they vote to do something for Miss May tomorrow? If they don't, then they go to another vote on Wednesday, not the same type. Then they want to do the Brexit deal in a different way. Thursday could be they extend, could be the end of her reign. We don't know what's going on. It's a rough one there. As you take a look, though, at the S&P, you've had a nice run-up, a bit of a correction. The market corrected down to last week where it was down 58 points, as you can see. And now the market's made up almost, what, 30, probably 50% of that, if not more. So the question is it going to get back over on a closing basis, 28.05 or not? As we look at what the market's done, I think you'd agree. We've entered a sideways period, and if you look at the top of this market, it's into resistance from prior tops, in fact, 3 of them. So a big question for everybody is going to be, can the market break through that, or is the market just a bounce from that top and then it starts letting loose again? Jury's out. When you take a look at the chart, I say the jury's out because you have a higher high, lower low. That is not a trend. When I look at where the market rallied back to, let's go to Friday. This is Friday's action. This is the 200-day moving average of closes in the gray and the 18-day. Remember, I'm saying it has no trend already because it's got a higher high, lower low. The bias is down because it's under the 18-day average of closes. It rallies up today, and in looking at the market, it's going to look like it's going to settle at or over that 18-day average, which will put the bias back up, but still not a trend. On breaks, if one does occur tomorrow, I'd look for support between the 18-day and the 200-day average of closes again. Where did the market get its footing? Let's come back to last week, Thursday. On Thursday, this is where we finish, and as you know, on Fridays, I do the weekend review, so I can't show the dailies. On Fridays, you went down to the lower Bollinger Band, tried to stay under it, and you couldn't. You stayed and finished the day about 10 points over it at 27.47, which by itself puts resistance, if it rallies, back towards the 18-day average of closes, which is what it did today. When I look at what momentum did, if we come back to Thursday, you took the market down. You did not hit oversold territory. You just got to a point in the market where you were coming down, and today you came back up, and momentum hasn't yet turned up. It's trying to hook, but the red line, the K line, isn't over the D, so you haven't had a flush out to the upside where momentum's coming back. When we come to the NASDAQ, let's go back to Thursday again. You have a market with a higher high. You already had a lower low. The market's caught in the sideways vice of the Bollinger Bands, which is an algorithm designed to keep the market trading within the bands 95% of the time, going sideways. That's often a recipe for getting churned up in a market. Just trust what I'm saying. The narrower they get, the rougher it gets. So here's the market. Goes down Friday, challenges the lower Bollinger Band, comes back and settles over that, putting into play if it rallies, you get to the 18 and the 200-day average of resistance. It went through those today and actually got up almost to the, in fact, it did hit the upper Bollinger Band. It got to 71.76, and last is knocking on the door. So you've had no follow-through in trying to break through the top, no follow-through in trying to break through the bottom. You have a higher high, lower and low pattern. It's a son of a gun. In the Dow, we have a pattern that had been lower highs, lower lows. You got pretty strong support coming into Friday at the 200-day average in the Bollinger Band. That is where I'd be looking, because the market still has downside momentum, where shorts might be looking to come out of the market. That's what happened. Now, if the market rallies, and I don't know that it's going to rally, back to the 18-day average would be where I'd look for some resistance. This is today's action. When we come to the Russell, let's go back just the way we did. This is where you finished off on Wednesday. This is Thursday's action. Now, let's go to Thursday like we did for the other markets. Lower highs, lower lows. As far as I'm concerned, you've about hit that lower Bollinger Band. That number's 15.19. You hit 15.20.20. The market goes through it on Friday, so now you've hit the market. If it falls further, I'm going to look for support at the 100-week average, but you're in oversold territory. If you get a bounce, I'm going to look for first level of resistance, 18-day, then the 200. This is today. You haven't quite gotten up there yet. One of the things that I espouse here is that I've watched VIX traders for the years upon years upon years, especially in this low volatility market like we had all of 2018. And when you get to these lower volatility markets, what I see, and don't get me wrong, there's plenty of risk with it. I see when the market hits the lower Bollinger Band, I'm seeing put writers come out, trying to get out at the 18-day average. And when the market gets up to the upper Bollinger Band, I'm seeing the call writers come out, and they would have had an opportunity right here on Thursday. Market goes against them, but they're going to try to come out at the 18-day average of closes, which they got today. Got it? That's what I'm seeing over and over, and you'll hear me talking about that. In the T-bond market, we have a pattern of lower highs and lower lows, which is a downtrend. However, you haven't been able to close under the 18-day average, and when you're over it, I consider the bias up. The two fight each other, they wash each other out, and I'm in an overbought condition. Any reading in the slow stochastics over 70, where you're not embedding, over 70, you're overbought. So I'm looking at a market that is overbought. It extended the bottom of this Bollinger Band series. You can see how sideways it was going, but it hasn't been able to prove anything from there. So we'll see what happens. Close under the 18-day average, and you probably will bring out the bears back into the market. In the 10-year note, you've gone from the Bollinger Band bottom. I laugh because it's pretty much what we talk about so often here. You go to the Bollinger Band bottom. I think the pros are covering shorts. If it goes to the 18-day average, that's the resistance. I don't see a trend at this point. You got a higher high, lower low. Market moves up, hits the upper Bollinger Band on Friday and backs a little. I mean, this is just sideways action that's trying to extend the Bollinger Bands, but it's not doing much either way, and it's overbought in the process. TLT is still in a downtrend. It's got the lower highs and the lower lows. However, with the settlements over the 18-day average, the bias is up. I don't see a trend at this point that's got everything going for it. In other words, the bias up, the swing line down, and the market entering a pattern where if it's just open steady to higher tomorrow, it'll be overbought. In the dollar index, you've hit the upper Bollinger Band and you're backing off. What's the importance of hitting Bollinger Bands? Only 5% of the time do you settle out of them. That's the importance. And some markets do follow them in a different way than others. Currencies really like them. They pay attention to them. That's what I have found over my career. I don't see a trend in the eurocurrency. I got a higher high and lower low. You tried to extend the downside really hard. You came back Friday and you're trying to extend back up a little. What is the trend? There isn't one. The bias is down and you're oversold as can be. In the British pound, you had a market that had a pattern of with an outside day on Friday. You came down. If you look at the 18-day average, that's 130.84. You hit 130.74 on Friday. So you were neutral for all purposes. You closed slightly under that. Okay, maybe you can slide to the 100-day average. Market goes down on Friday, not quite able to do it. Today it extends a little and then comes back at you with an outside day up. You're now neutral in the market again, but of course you've got these votes coming. I mean, I'm sure somebody's trading this market, but it's like standing in front of a freight train. In the Japanese yen, you rallied back last week into the resistance area of the 18 and the 100-day average without a trend. Lower low, higher high, and since then you're just sort of backing and filling right now, looking to see what the next event will be. In Bitcoin, you ran out of this bit of an uptrend. Momentum in the market has gone flat. You've got a pattern of a higher high and a lower low, support at the 18-day average. I just see sideways action for the moment. Brent continues to gain on WTI, and this is a big week because in Houston there's a huge conference going on where all of the heads of the big world oil companies, the head of OPEC, Ford will be there. I mean, there'll be one speaker after the other talking about where's oil going. The one thing we've learned is that even with reduced rig counts, and we are about half of where we were in the past, we are producing a record amount of oil in America. And our technology has just proven to be the most superb technology for shale that there is in the world. We're just getting more oil with less wells. Now think about when they increase the well count. And remember, you're at that point where the pipelines are running pretty well full. That is a dilemma for the shale area, but it's also why you're seeing all that investment in there by Exxon's and all the other companies. In any case, the spread is widening as OPEC keeps saying they don't see themselves cutting back production until the June meeting for discussion on that at this point in time. So when you come to the Brent, you're sort of stuck just here at the $65 range. And the market just seems to be caught without a trend right there. In the April crude, you're just sort of stuck at the 56 without a trend. You've got this pattern of higher highs, lower lows. It's a pretty ugly chart. Hard to make anything out of it. Gasoline is where the power is. You know, I'm going to repeat it. I don't remember going in the spring, summer where we don't start watching in your local radio station. You'll hear it as you're driving what your nearest gas price is, right? If you live in a big city, you're hearing that all the time. And it's not going down. It's typically going up. So I just look at this market as trying to, if you will, establish some action here, and if it's going to follow the seasonals, often this is a market that tries to work higher. Is it trending? It isn't. You've got a lower low and a higher high caught in this somewhat sideways action that it's had, but I look at the slow stochastics, and as long as they stay embedded, I consider that very bullish. The market that's losing a story is going to be natural gas. It's going to lose the wintertime story. Just so you know, this week in Chicago we'll hit 60. Now, a week ago we were in the teens, but now we're starting to really flirt with the warmer weather. It'll disappear again, but we're at March 11th, and each day that goes by, especially with us converting and going our clocks forward, we have more sunlight, it gets warmer. That's less demand for natural gas. In the end, it's more if we get to hot weather. So right now, the market stepped out of this uptrend. Now it's got the lower low, higher high. It lost its upside momentum, got back to neutral today, and it's going to have to be a chart that tries to rebuild. We're going to discuss this and more at this webinar this coming Thursday. Hope to see you there. Remember, if you don't see it in your mailbox already, you didn't get it. It's not going to magically show. Look in your junk mail or your clutter, or call my staff, and they'll be happy to send you out an invite. I'm Ira Epstein. Have a good day.